LinkedIn Live today, Thursday at 2 p.m. I've got Jason Balara on as our esteemed guest, and I am going to bring him in right now. I guess I might have a little lag on my video, so I apologize, but here we go. Hey, what's going on, Jason?
How you doing, Mark? Hi, Matt. How you guys doing today?
Hey, doing good, man.
Yeah. Yeah, so we usually kick off the show just by having you give us a little bit of background. We know you were in the veterinary industry for a while and you pivoted over into real estate. So maybe just tell us a little bit about that journey and what you're up to now.
Yeah, sure. Thanks. I've pivoted, but I haven't left the veterinary industry. So I've been a veterinarian, graduated in 2004, became a veterinary surgeon in 2008, and have been focused exclusively on that as far as within my veterinary career. I also, sort of, I guess, dual track. I got into construction as a teenager. So um, throughout my, sort of college, vet school, life afterwards, was always doing real estate on a small scale, residential construction projects. The most I ever had was a three family in Boston, which is where I'm from. And then you sort of fast forward through to 2020. I decided I wanted to get more serious as a real estate investor and dove into the world of real estate syndication. I haven't stopped doing surgery. I have, though, at this point, spend less time doing surgery than I do actually on real estate business for different reasons. What some of that just being the ease of one business for me at this point over, surgery's become very efficient and real estate is, as probably most people know, we're in a challenging market right now. So it takes, sort of three times the work to get the same amount done. So I guess that's kind of in a nutshell my background, but it has really been probably more of a dual track than it looks like from the outside.
Cool. And how did you decide to just go directly into syndication? That's like a big leap. What was the deciding factor there?
Yeah. Um, I've always been really very much a DIY guy. And when I learned about syndication, it was appealing for a couple reasons. One, we had our son was a year old when I started kind of digging in. And so I knew I wanted more time to be at home. I think I wasn't willing to be completely passive. I do like real estate. I like being part of the project management and all of that. So something that I could do, where I didn't have to be in an OR. And I also liked the scalability of it. So I sort of had this, I started very briefly down the road of, okay, I'm going to do a bunch of, single family rentals. And it just pretty quickly thought, well, how long is it going to take me to buy 100 houses? And yet I can go out and buy a 100 unit apartment complex. And to be fair, it's not as easy to buy an apartment complex as it is to buy one house, but 100 houses is quite a different level. So it just it was appealing from a scalability standpoint. It was also very appealing from I guess, being more of a CEO than being the guy swinging the hammer.
Yeah.
So where did you even become keen on like syndication was even a thing? Because I didn't even learn about it until several years ago after I had been in real estate for like 11 years. So what tipped you off
Yeah.
to this being even a possibility for you?
Podcasts, really. Listening to the Bigger Pockets podcast. I didn't know about it, and then I heard an episode. I think the first one I heard about syndication was with Michael Blanc, and listened to his. He's a great spokesperson for syndication, and so I listened to that, and I was like, "Huh, this sounds like something that's very appealing." But yeah, you're right. I mean, we'd all love to have a time machine, but if I had known about syndication in 2009, 2010, and had been able to be a part of it then, you would have been able to, a lot of people have made a lot of money over the last decade having that,
Yeah.
that had that information then. But it's just things are far more accessible now with social media and the internet. I mean, it's hard to say that you don't know about something unless you're not trying to know about it at this point. So it was kind of, and I think even over since COVID in 2020, like actual fact has become even more and more prevalent. There's more and more podcasts. There are more and more people doing cool things like this, where it's like, we're live streaming to talk about exactly what we're all in this for, and kind of the excitement behind it.
Yeah, for sure. I know I started in 2008 as well, but I did what you did at the beginning with the single families and then slowly getting into the multifamilies. And now, all these years later, looking back, I see people that pivoted sooner than I did and got into the syndication. And, I always knew about syndication, but I never really dove into it and found a mentor or found somebody that had that knowledge that I could tap into to really do it. And in hindsight, I'm like, yeah, I wish I would have learned about it a little bit sooner in my journey.
Yeah. I mean, it's two things, right? It's the knowledge, and then it's the taking action. Like that's, and that probably goes for just about anything. But yeah, in relation to syndication, it's figuring out that it exists, and then kind of figuring out how to get in the action and be a part of it.
Yeah. What about you, Matt?
I mean, I'm curious, like backing up a little bit here, how a vet even got tipped off to be like real estate being a thing. Because I mean, as we know, like 99% of the people out there in the world want to own real estate or have exposure to it. And very few people take action. So what was that like seminal moment of when you got inspiration to even consider real estate as an investment?
I guess growing up poor and living in a different bad apartments after bad apartments. We moved a lot, and son of a single mother with two kids, and so she was doing everything she could to make ends meet. But I think that experience I always knew I wanted to own, and so then when I got to the point, I was like early 20s, and I was like, all right, I don't want to keep renting. I want to buy a house. And the first thing I did was go out and buy literally the worst house I could find, because it was the only thing I could afford. And then I just started figuring it out. Like, okay, well, how do I fix these things? It was really that whole mother's necessity of invention kind of thing. I didn't invent anything, but I learned how to fix things. And then the way it started, sort of the contractor that I hired to help with a few things was like, hey, you seem to be, you pick this stuff up quick. You want to come work for me? Sure. So I got a job with a contractor, learned more and more about construction. I took a job with an electrician at one point. So it was mainly, I guess, to answer the question, mainly out of need, I guess, in terms of why I got into it to begin with. But I think a lot of people have that sort of accidental journey into real estate. And, for me, it was like, I bought that first house for $99,000. I refinanced it a couple years later at like $250,000. Like it was before 2008. So it was like a good run up of market that helped, but also I renovated everything, added a bathroom, like kind of all. And so I saw that power, and then just did that over and over again on the residential side of things. And so now, to me, like doing especially the strategy that I value add multifamily, to me is just a large scale flip. It's like we're doing the same thing. We're just, let's renovate these, increase the value, and then we can go ahead and sell it for more money than it was that we bought it for. And so that's kind of the idea.
Yeah. How are you finding the current market? Are you?
It's challenging.
Yeah, challenging.
It's challenging to operate, and it's challenging to find more deals that are gonna pencil out. I think it's just being patient and sticking to fundamentals right now, even more so than maybe the few years past when the market was so hot.
Yeah. What are the operational challenges that you're facing?
Expenses are going up sort of across the boards, right? You're going to have an increase as you do value add, you're going to have an increase in taxes because the value of your property goes up. So you're going to have a big increase there. Insurance costs have gone up quite a bit over the past probably 2 to 3 years, especially. And depending on what market you're in, I think if you're in Florida and Texas, it's even worse. We're mainly focused on Atlanta, so it's not been as bad on the insurance side. But those are your two probably biggest line item expenses. And so those have gone up a bit. Cost of construction has gone up. I think those are the things. We're still getting rent increase, but not at the rate that we were getting even a year ago. But so, obviously that the idea is we want lower expenses and higher rents. That's the way to make a successful property. And so you have to start looking at everything, like literally every single line item. And that goes with your, kind of everyday expenses. Can we get a lower cost of our insurance? Can we contest our property tax assessments, things like that, I think, most everybody does, but they're even more important right now to go through those steps. And then on your expense side, you either need to, you're interviewing more and more contractors, more and more vendors. Maybe you're changing the scope of work or the level of renovation that you had initially had in your business plan, because you're realizing, okay, now putting in granite countertops maybe doesn't get me $200 more a month in rent, and I can spend half as much by putting, some sort of resurfacing the countertops that are there, or whatever the case may be. You have to pivot a little bit and look at, being able to save on the expense side and do whatever you can to still drive revenue.
Yeah.
So can you point to specific, I guess, pivot that you may have made on a recent project, like for examples of maybe where you had to change midstream or even pivot from your typical strategy with a value add opportunity?
Yeah, I think probably the biggest impact that we've had has been with that change in, kind of scope of work, level of renovation, because what we realized, one, you just essentially the costs have gone up so much that you can't maybe afford to do the highest level of renovation that you might have previously, especially if you're talking about a C or a B class building. And then although you're changing that level and that scope of work, you still have to go in and look at every single line item. And so it's kind of like, I use the example of countertops, but to be honest with you, I have found that if you look hard enough, you can get a solid surface countertop with not much more than some sort of less durable type of countertop, and then you're going to have to refinish that every time you have a tenant turnover. So it's an example that you need to look at, but it's again, it's not just thinking, oh, I might save a little bit now, but guess what? I won't have to do anything to that countertop at the next tenant transition. I think there's other things, like I said, in terms of that scope of work, like maybe adding washer dryer connections. Washer dryer connections, depending on where you're at, might cost you $1,500 to $2,500 per unit to put that in, depending on the ease. And if you find out that the tenants that you've got in your building don't really want a washer and dryer in their unit and they're happy to go to the laundry facilities, it's maybe not worth putting that in, because you're just not going to get the same bump in rent that you might say for a B plus or an A class asset. So those are maybe a couple of examples of where we've pivoted. I think the sort of grand plan of you're going to go in and renovate everything top notch and then reposition the asset completely and have an entirely different tenant base, it's probably not realistic right now. I think you've got to maintain occupancy, and so it's kind of balancing out those two factors.
Yeah, that makes total sense. So are you seeing like a decrease in rents, would you say? And that's kind of like driving it, where you're like, hey, we thought we were going to hit these margins, and people are kind of retrenching on what they want to pay in rent. And so we better scale back just to be ahead of the curve.
No, actually, no. That's probably the sort of the best news. We haven't seen rents go down. We haven't seen the same growth, but the rents at all our properties are already like over pro forma, and in some cases substantially over pro forma. And so that part of it is a great positive. I think one of the kind of issues that you run into is making sure you're putting the right tenants in there. And so one of the things we've been exploring is because I think delinquency, bad debt is a problem for a lot of people, and probably more prevalent in some markets than others, and more prevalent in certain, the higher you get, like an A class asset, you're probably much less likely to have delinquency. But we've started actually recently looking at things. There are a number of different programs out there that are, I don't want to say guarantee the rent, but they're like insurance programs that essentially you can have a way to say, oh, you're going to recover some of that money if that tenant doesn't pay. And so we've started to look really closely at things like that, because I think the reality of most of the bad debt is, yeah, sure, you can send once those tenants leave, you can send them to collections. So you're not very likely to get any of that back, and so it's kind of looking at solutions to those types of problems. Not so much the rent growth hasn't really been an issue.
So what kind of markets, like now you mentioned the Atlanta market, what is kind of your buy box for new acquisitions that you're looking at? Like, what is the criteria for your acquisitions?
Yeah. So yeah, Atlanta has been my main market of focus thus far. I love the market. I think it's still got a lot of room for growth. The biggest challenge there is the eviction situation and bad debt, because I think that there was the eviction moratorium, so nothing happened for, I think, about a year and a half there, and then there was such a backlog that they're still digging out that hole, and I think that's made it hard for a lot of us operators in that market. I'm sure that's an issue other places as well, but I think every market has maybe its specific challenges, and I think with Atlanta, that particular challenge is just an infrastructure challenge, and so they are working on that. The pace is picking up. That's going to get turned around. So I actually think the ability to grow in Atlanta as an operator is really great. Actually just closed yesterday as with partners on a deal in Phoenix, Arizona. That's another great and hot market. I think to me, the deals right now, maybe, I know I'm off track here a little bit, Matt. I think that my buy box is newer, so B class, newer than 1985 and greater than 100 units, which is kind of not what I started with. I started with, hey, I want to be able to do deals, so looked more like in the little bit smaller than that C class range. But now I think, seeing the true economies of scale and efficiency there, I definitely want to stick with bigger. So the Phoenix deal is a 432 unit. So it's a big step up. And that's, we've partnered on that. So that's our buy box at this point, but I think it depends, everything is market specific. So I think, kind of depending on where you're looking, like I said, I still love Atlanta. I have lived in Houston before and thought Houston would be sort of a great market, but I am concerned about the insurance things that are happening in Florida and Texas, and that may be something where I miss the boat, because maybe there's opportunity there, but I do think that those are big concerns. So it's kind of finding a place that fits your buy box, you're comfortable with, and also mitigates the risks that concern you.
What was your reasoning? Oh, sorry. I was just going to say, what was your reasoning? And when you went from the smaller C's and right up to B's, was that kind of like a leap of faith, or you were like, no, this is no brainer. This should be the direction I'm going in. And what did that process look like?
Yeah. So I was always, I've done mentorships. A lot of the people that have been doing this for a long time are always talk about how, sort of bigger is better. And I think that when you're starting out, it's daunting to think, I'm going to go bigger. And part of that, for me at least, is, sort of the equity raise required. So the bigger the deal, the more money you've got to, bring in. And I wasn't as confident in my ability to raise that capital, or, and so that's been part of the shift. But in reality, it's just the experiences in C class and the size. And so, my property's a 70 unit and small in size. 90 unit has a much better efficiency of scale than the 70 unit, right? So if you have, say you have the same number of delinquent tenants bringing in more money on a 90 unit, and now if you say, okay, I have 400 units and I have the same number of delinquent tenants, it's not going to move the needle as much in terms of the property cash flow. So it just, the size and the vintage in terms of what you're actually doing from a value add standpoint, it has become sort of a no-brainer as far as that's the way to move.
And then just a quick follow-up. Are you glad that you did the C to like kind of get that experience and to get into syndication? Or in hindsight, would you say, you know what, I probably should have just gone out and got into the bigger Bs sooner?
No, I think every experience is a learning experience, and a there's a lot of good. We still have these deals. I don't, it's hard right now to run them because of the market conditions, but I don't think that'll stay for ever, right? And so that's the whole idea is, for a while there, the market was so hot, people were exiting in 18, 24 months and sort of achieving their projected returns that they had set over, say 5 years. But the reality is this is meant to be a longer term hold, anywhere from 3 to 7 years. And so you can look at it like, oh gosh, it's tough right now, but I'm 2 years in, I've got, 3 years, 4 years more to get us back into a really good place, and maybe potentially beyond what we had expected. And so I see it all as the ability to learn and grow and change what you do, both within that moment, within the operations that are currently going on, but also just looking at future deal flow and what I'll look at as far as priorities.
Yeah.
So Jason, in terms of like evaluating a new market, because it looks like, you're expanding, establishing a foothold in Phoenix, for instance, what are your sort of metrics you look at from a demographic standpoint when you are targeting a area, and also more importantly, a sub-market of that area? Because Phoenix is very diverse from an income perspective and has, all across the board. So tell us about that.
Yeah, it's the same, that's 100% true, that Phoenix is very diverse, and Atlanta is the same way, right? You can be even within the same county or city in the Atlanta MSA, it can be very different, 5 or 6 blocks north or south, east or west, whatever it is. So you do have to look at everything on a micro level. In terms of what I looked at here moving into Phoenix, part of it is just partnerships, right? So that's another thing I feel like I've learned, over these last few years, is finding who you want to partner with and sort of join forces to grow. And so looking at people that trying to partner with people that are ahead of you, whether those are mentors or just people you're meeting through networking. And so you're looking, to me, demographics wise, you want to look for population growth. Certainly that's a big one, but realistically, job growth, and is it sustainable? So there have been, I think, a few markets that have blown up recently. I guess Austin comes to mind, maybe Boise, Idaho, where there was a huge kind of explosion of population and the market got even hotter there. But like Austin itself is a pretty small city. So how much more room is there for growth there? Phoenix has the ability, just like Atlanta, or even like I live in Los Angeles, like the cities that have place, and Houston is one, places to expand outwardly, and essentially be within that sort of commuter zone, I think are really good opportunities. And then you have to just get really hyper local and look at the income levels and things like that, within a mile to 3 miles around your asset.
Yeah.
So let me ask you this. I mean, I was just underwriting a deal actually in the Phoenix area, and this one is at first glance, what I do is I take a look at kind of what the retail adjacencies are with subject property, for instance, and kind of getting an idea of the flavor of the area. And then I'll look at median household income from a 1, 3, and 5 mile radius to understand where this particular neighborhood sits in that. A lot of times I'll look at an area and there's, let's say median household income for this particular subject property was like $40,000 a year for an average household of two people. And this property had 2-bedroom apartments as part of their unit mix. And the contract rents and the rent roll were $1,500 a month, which indicates to me is like, okay, well, this is an area that's got, this property is definitely, I'm questioning whether these residents are rent burdened, because that's definitely exceeds, the 30% threshold, right? So what kind of metrics do you use to evaluate household incomes and trajectory for a value add? Because sometimes these value add communities may be on the cusp of something in the path of progress to be able to reposition an asset and do those things. So how do you look at that?
Yeah, that's a great question. Great points, Matt. Because I think you're absolutely right. If the median household income is $40,000 and the rents are $1,500, realistically, that's not enough to qualify, right? There's people are supposed to make minimum 2.5 times, but usually 3 times the rent monthly to qualify. And so it's you have to know, okay, if the rents are here and my projection is here, because most of us aren't going in with the idea of we're going to keep rents the same. And so is that area going to be able to support it? So you're looking at that median household income within 1-3 miles. You're also looking, I believe you have to go there. I think some of it's got to be some level of feel and instinct, as far as do you see this as the path of progress? The broker's going to tell you it's a path of progress always. It's never, they're never going to be like, this is a place you don't want to be, right? Because that's their job. And so you have to go and feel good about it, do your research. But I think that a median household income is big. This is a silly thing, but I want there to be a Starbucks there. I want there to be something a company like Starbucks that does that research at such a high level that they're sort of like your backstop. They've done that research, and so if I have a Starbucks a mile from where I'm looking to purchase, you're probably looking at a pretty good demographic. So, and I'm sure you could point to other things like Target and there's other stores that do that, and they have humongous teams and millions of dollars devoted to figuring out these sort of population demographics. So, I mean, that's kind of at a basic level. Sort of where we're looking, but I really do feel like I need to see. I think the other thing is you go there and talk to local people, right? So people that have lived there for 5-10 years and have seen actually what the path of progress is and what do they think this area is doing. It's just it's maybe a little more time consuming than just pulling up a report in Yardi or CoStar. But I just think it's you put it all together. You take all the data that you have together, and you have to feel good about that. It's going to be an asset that you can achieve the business plan that you're projecting.
Yeah. What are you doing for marketing? That's always a hot topic. You went from smaller C class to larger B class. So you had to raise more money. What has been your strategy for getting more dollars in the door?
Still working on that. That is that is definitely like I said, my background is in construction, and I'll people may or may not know this. Veterinarians are not known as extroverted community. There's not a lot of marketing that happens in the veterinary world, and so it's definitely not my background, and it's not an area that I'm especially comfortable in. What we have been doing is looking again, I think mentors, guidance, things like that are all important in all areas, but I've been looking at programs designed to help, one, with the automation of it, two, with the actual kind of structure, like how do people that are doing well with their marketing, what do they do? Mark, you and I met through Yona's LinkedIn challenge. That's a thing that he does, and Yona's great on LinkedIn. So it's just kind of looking at what people are doing. We're increasing our outreach. We're increasing our just our content production. I say this all the time, especially with my team, but like, I'm definitely the bottleneck.
Mm-hmm.
And just sitting down and creating the videos and all the things that, sort of need to be up there, and getting more comfortable with, sort of being that face. But ultimately, it just comes down to having a lot of conversations, and that's what I've been doing, is just ramping up the automation, then sitting down and having conversation with people as you possibly can. And so you have to, I think you have to approach it from that, one to many side, but also at the end of the day, if people are going to trust their hard-earned money with you, they have to know who you are. I mean, you have to have like some very real conversations.
Yeah, for sure.
So, you ask me that question again, maybe in a year, and I'll be a lot better, but I still working towards making that a priority.
Yeah. When I first saw Yona, I was just blown away by his approach to social media and LinkedIn. He just makes it look so easy and effortless. And everything that he does gets so much engagement because he is a go-giver. It's just really genius. I'd recommend anybody that hasn't looked at what he's doing on LinkedIn just to go over and just read some of his content and what he's been up to, and you'll see how that really works.
Yeah. I mean, when you see the people that are doing it successfully, that's, you can, I've done it. Like I've spent money on the programs and things like that, and I likely will continue to do that, because I think there is a way of, maximizing the value of those programs. But at the end of the day, I think this go for any of it, but just find someone who's doing it well, and do the same thing they're doing. With your own style. I'm not saying to steal what, don't copy and paste Yona's posts, but realize what he's actually doing, and kind of apply that to your outreach, and I think it can be hugely beneficial.
Oh, for sure. Yeah, like his self-promo Sundays and stuff like that. It's really cool.
Yeah, and it takes a long time. Like we look at it now, and it's like, well, it's amazing. He puts a post out, and hundreds of people comment on it, but I'm sure that wasn't the case when he started doing this, however many years ago. And it's just a matter of, I think, being the willingness to stick with it.
Yeah. Consistency and also going and engaging with other people. He's really good at that.
Yep. Yeah.
Sorry for interrupting you, Matt.
Oh, no worries. So as an introvert, because there's, not everybody's an extrovert out there that's doing this stuff. So I guess, how do you parlay that into the one-to-one approach in terms of how you do manage that conversation with a potential investment partner after they may have like entered your funnel or reached out to you and said, hey, it looks like you're doing some cool things in real estate. I've always thought about doing it. Like, how do you kind of take it from there from an order of operations standpoint?
Yeah, that's a great one. I think you're going to have two types of people. You're going to have, kind of the person that you described, Matt, is that actually got into your funnel because they're interested in real estate. That's maybe the easier conversation, because they're coming to you and wanting to know. And so then you're just answering the questions and looking at what you're trying to solve problems, right? So this person's coming to you for a reason. What is it they want out of it? Maybe they want to learn how to actively invest. Maybe they want to learn how to passively invest. Maybe they don't know, but they see that it seems like it's a good idea. And so you got to figure out why exactly they came to you and have that conversation. And then I think that the trickiest thing, from an introvert's standpoint, is I never want to sound salesy. It makes me feel bad when I start to feel like I'm sounding salesy, and I probably feel that way very early in the process. And so but I am very passionate about this. Like I 100% believe like real estate is the way to build your wealth. If you want to be active, I'll help you be active. If you want to be passive, I'll help you be passive. If my deals don't work for you, I'll point you in the direction of someone that it will. Like, I think it really is about, sort of serving people. I get super, super excited when I talk to very young people that are, starting to think about this stuff already, because I feel like, I was, in real estate, I guess, but didn't know I was in real estate for 20 years. And then, it's like if I had gone at it the way I do now, even 10 years ago, it's just the power of time. And so if someone's coming to you and they're already interested, that to me, that's the easy conversation.
Mm-hmm.
The harder conversation where I start to feel salesy is, quite honestly, my friends. Like everybody says, you're supposed to start with friends and family. And it's like, well, my friends, I don't want to ask my friends for money, which is not what we're doing, but it's sure what it feels like, especially in the beginning. But at the same time, I don't want to send distribution checks to other people and not to my friends. So it's like, it really is this kind of like tricky spot to be in, where it's like, here I am. Sometimes I struggle to talk about it with my really close friends because they know me for, they've known me for forever. They know me as a veterinary surgeon. And now it's like, hey, I'm doing this other thing. I definitely believe you should be involved. Like, I have no doubt you should be involved. But at the same time, like, it's a hard transition to make into that conversation. So that's really probably where I struggle the most. I think when people come into the funnel, because you put things out there that say, hey, I'm a real estate investor, I'm doing syndication, and they come in, great. But when it's like, some of my best friends, to me, that becomes a harder conversation. And I think that's maybe the opposite of what people say it's supposed to be. And maybe I'm just weird about it. I don't know, but those are the harder conversations for me. And so if I get a friend that's interested, great. Like I'll talk about it all day, but the ones that I assume they know what I'm doing because they know me, and then we don't talk about it, I always feel like awkward that I to bring it up. It's kind of,
Yeah.
But it's a lot of it is being, sort of getting uncomfortable or getting comfortable being uncomfortable, and doing things like my podcasts, doing things like this with you guys, like just trying to get out there and be get used to having the conversations, I think is the key to anyone who wants to do it.
Yeah, for sure. I think with my friends, I kind of have the same feeling. I don't want to be like salesy and trying to pitch them stuff. But when they do ask me about what I'm doing, I'm not hesitant to like talk about projects that I'm working on. And then, like you said, if it like progresses and they get interested and they start asking about it, then I can take it further and just say, yeah, if you were interested in investing money, I've got a fund set up for this. Or if you wanted to buy a property yourself, I can help you find something and be a little bit more active, and just let them kind of choose their own adventure.
Yeah. And I think I'll give you an example of something I did recently that I don't know if it's a good idea or good strategy or not, but I have a friend who I've known her for a long time. We have sort of surface level talked about what I'm doing now with real estate and things like that. And so the other day we were, texted back and forth about one thing or the other. And then I was just like, hey, listen, so I sent her the link to my webinar for my fund that I have right now. And I was like, watch it or don't watch it. I just don't want to make other people money and not have given you the opportunity. And so I feel like I've done my part. Here you go. Mm-hmm. You can, if you're interested, get back to me. And so I don't know if that was good for her. It maybe was more comfortable for me than just being like, hey, do you want to talk about investing in real estate? Like it's just kind of, I don't know if that's even a good strategy, but I did it because, she had some at least surface level questions about it. So I'm sure people have other tricks and ways of managing these things. But yeah, it's definitely something I'm still, sort of working through.
Yeah. When I'm coaching some of my people, I tell them to make the phone call, even if a text is easier. And a lot of times, because they're younger and they're used to this texting generation where everything can be put in a text message. I get it. Yeah, you could definitely take that approach. But when it comes to sales, there's no replacement for actually speaking to somebody, because then you can have a conversation that might go in different directions that you weren't even anticipating, especially when you keep it like just open ended and just like, they're more of like a friend conversation than like a business call. Yeah. And so when they listen to me and they're like, all right, fine, Mark, I won't send them a text. I'll give them a call. They tell me, hey, that was a really good idea. I learned about this, this, and this, which I wouldn't have learned through my text messaging. And we talked about all this stuff. And, now it's going to lead to a sale. And I'm like, okay, thank you for listening to me and not just texting that person.
Yeah, no, I mean, it's so true. And it's funny, like part of the, sort of growing the outreach through automation is having conversations, right? And whether it's a phone call or a Zoom call or whatever. And honestly, like I've enjoyed it. Like I have like learned things about people, like whether they invest or not, fine. But like I've enjoyed learning things about them. And there's been plenty of conversations where uh, they've introduced me to someone else, or I've just been able to help in some way. And so it's, I think realizing that it's a slow process, right? You're not just going to get on the phone. Even if you call, 1,000 people, you're not just going to be like, well, 10% of people invest, so I just got to call 1,000 people, then I have 100 investors. Like it doesn't work that way. It is a work done over time, just like real estate is. And I'm not always the most patient person, so it's kind of sometimes I have to remind myself of that.
Yeah. And I find when I'm talking to people, a lot of communication is storytelling. And sometimes you think of something that happened to you and you tell somebody it, and now it becomes a story that you're like, okay, that's actually a good story that I can use when I'm trying to, get this point across or get myself closer to a sale. And so just having a lot of communication with people, I've really, I've never been coached on scripts or anything like that. I've kind of like organically built them, and a lot of them revolve around storytelling. So I really think communication, and you'll have these like, oh, actually, that was a really good story. I'm going to use that again next time I talk to somebody.
Yeah. No, I completely agree. And I think the people that are most natural at this are just good storytellers. And maybe it was scripted at one point, but when they're talking now, they've put in the reps, they've done it enough times that it's just how they do it.
Yeah.
They're just talking. It's just a conversation.
Yeah, and the best ones, like you said, they're storytellers. So that even if they started with a script, they've turned it into their own script with their own stories inside of that dialogue.
Yeah,
because you got to be able to speak to something to have somebody be confident in you. That they're going to buy from you. They need to have confidence, and like if you don't have stories to tell, how are they ever going to be confident?
Yep, completely agree.
So on the subject of friends and family, because like this is a major thing that my students struggle with, is like that's the first place you start. And the thing that's really helped me is somebody told me this one time, is that privilege is just another word for generational wealth. Now, Jason, it sounds like you came from pretty humble beginnings, that sort of thing. But I think that a lot of people are afraid to use their privilege or generational wealth, not really realizing that their parents and grandparents' parents made a tremendous amount of sacrifices to put you where you are right now, in the sphere that you are right now. And to not use that privilege that these people have made sacrifices for you is not, giving you the opportunity to help other people create generational wealth as well. And also I think that sort of thing with people, like, I don't know, like I know it's like not asking for money, it's presenting an opportunity, right? But I think that what people don't realize is that everybody wants to be in real estate. Everybody. I don't care who you are. Maybe there's 1% of people out there that don't want to have anything to do with real estate, but there's 4 things that stop them. It's the 4 T's, right? The tenants, trash, toilets, and the most importantly, time. They don't have the time to look for deals. They don't have time to educate themselves on how to operate the business, and don't have all the time for all the other things that go involved with it. So they can leverage you and somebody else for for your expertise, for them to be able to achieve much better results than they would on their own. So I definitely think that, I think it's your duty to present opportunities to people that are in, your sphere of influence, that are friends and family, because, I've been to family gatherings before, and I had an uncle asking me, hey, do you have any deals coming up that, I might be interested in? And I told him about, one possible opportunity. And another person in my family overheard this and like texted me later. He's like, why didn't you think of me about that? So I think that just to be able to present the opportunity, I think it's just fair. It's fair for one. And also I think it's kind of like stroking, it can stroke people's egos too. It's like, oh man, Jason thinks I'm a baller, that I got, disposable income. I may not have like two nickels to rub together, but Jason thinks I have money. So
right. No, and that, I mean, all great points, but especially that last part is like, you don't know what anyone's financial situation is either. So I think for sure that's something that I at least, that fortunately has not really been one of the sort of limiting factors for me. I don't try to decide where, people are financially. I guess maybe I learned that as a veterinarian. Some people, drive up in their Range Rover and have lots of jewelry on, and they don't want to spend any money on their pet. And some people drive up in a 30-year-old car, and they'll spend as much money as it takes. So it's a not judging people, sort of by, that their outward appearance and in terms of what their interest level would be. I think at least I've been lucky enough on that part. That's not one of the things holding me back. So, but it's a great point. I mean, you should, as kind of like goes along with what I said, sort of to my friend is, and what I've been thinking a lot about lately is like my fear in not talking to my friends and this and the things holding me back there may also ultimately hold them back, because maybe they're ready to go, or they would be interested, and I'm not giving them that sort of opportunity because they don't know anyone else doing it. So I think they're great points, and they're great things, great lessons to be had. So, and thank you for reminding me of that, because I think those are really important pieces of the.
Yeah, and to add on to that, I mean, I think that when you're talking to people too, I mean, I'm a go-giver, and Mark is a go-giver as well. We're open books. We know that the real estate business is an idiot's business. I mean, it's basic arithmetic. That's why I got involved with it, because I'm not that smart of a person. I was a C+ student in school, and I think that at the end of the day, when you're trying to give as much value to somebody, at the end of the day, you do have to ask for the order in some way if that person is a good prospect for being an investment partner with you. So how do you ask for that order? Because if you don't ask for the order, like, they're not going to say, like, just apropos of nothing, like, hey, Jason, how can I, learn more about, your next deal coming up?
Right. Yeah. Yeah, I mean, there's a couple of ways. Yeah, no one's going to ask you, can I give you a bunch of money to invest? Like, that's not really the way it goes. So you do have to come, and that's something that I have been working on, sort of fine tuning. But I think one thing is again, depending on where you're at, if that's the first conversation, we're talking about, real estate and the opportunities and things like that. Usually what I'll try to do at that point is say, hey, listen, like, great getting to talk to you, getting to know you. Is it okay if I put you on my, we have a newsletter. Can I put you on that list? And can I send you my webinar? And then maybe look at it, if they have a spouse or family members they want to look at it, and then let's talk again. If it's someone who is experienced, or, you coming to that call, sort of already knowing what they're getting into, oftentimes at that point, if we have a live deal, so let me send you the deal, take a look. You have questions, we'll talk about it, or email me. And so I think it's just figuring out what their situation, again, what problem we're solving with that particular person. So I don't know that it's always the same, sort of question or lead in, but I think in general, to me, the idea is, can we get to a place where you have questions, mm-hmm. right? And sometimes, someone's entirely new to it. The questions might be, what is syndication? But, if they've invested in real estate before, or they just really trust you, then the questions are going to be, what's my investment amount? Probably the most common question you will hear, or at least that I'll hear, is, what's the minimum investment? Because I also get some people that ask the maximum. I'm like, I don't think mm-hmm. I don't think that's a real question, but like, mm-hmm. It's kind of figuring out what they need to know to feel comfortable going forward. I also think, especially with people that have not invested in syndication before, I often give them a little bit of a heads up on the PPM. So you're good, hey, I'm glad you're interested. Now you're going to go in our portal and you're going to sign up and you're going to see like a 70-page document that is full of scary things. And so I'll give them a little bit of heads up, because I think that like the first time I saw one, I was, sort of unnerved by it. And I think it's the idea is these are the things that have to be in there to make sure that, sort of we're in compliance with the SEC, but also to protect investors and let them know that it is an investment. But I do think, sometimes people are like, yeah, this sounds like a great idea. We've had all these conversations that just sound so casual and sort of friendly. And then, oh, by the way, here's a tremendously long document with all the risks. And so I think I like to give people a little bit of a heads up on that as usually a part of it once we get to that level.
Yeah.
So Mark, how do you ask for the order? Just curious.
So yeah, I try to study people that have been in sales for a long amount of time. And so anytime I'm on either the other side, or sometimes like I'll be representing a client, right? Like last night I went in and I was helping a client with a new build contract, and the gentleman that came in to do the sale, it was our second meeting. So he didn't get the sale on the first meeting, but the first meeting was kind of like that introduction, get comfortable. And then the second meeting, I could tell he was going for the sale because like he had the contracts and he wanted everybody to sign. And so I just kind of like studying these old school guys that have been doing sales for, 40, 50 years. And I would tell you what they pretty much do is they just assume the sale.
Mm-hmm.
That's like, it's not a question. It's kind of like, okay, it's time to sign,
Mm-hmm.
and they're like, they look at me and I'm like, well, you've got attorney approval. It's not really binding, but you don't want to have to come back tomorrow. So just go ahead and sign it. And they're like, all right, we'll just sign. So I would say assume the sale and just put the documents in front of them, and that's where the rubber's going to meet the road.
Mm-hmm.
Yeah, that's a great point. I mean, I think it even probably having the conversations from that perspective of it's happening because I think it's a great idea and I do it. So why would why wouldn't that person do it is probably a really good, again, because I don't think that's necessarily salesy if you're investing alongside of them. You're truly believe in what I'm not trying to sell. I'm not selling something that I don't believe in. I never will. So it's kind of like, this is something that I'm doing. All of our money, like all of our disposable money, goes into these syndications as well. So I'm right there with them. So I think that's a great point. Is just kind of assuming that it's going to happen. Let them tell you no. And that's another thing that I've heard before that I think is probably a pretty good advice. But try to get to know. Try to get to the no. Just basically so you're not wasting each other's time. In terms of still talking about this specific investment vehicle, is just if someone's being on the fence and that continues to go on, just be like, well, maybe it's not a good time for you right now, and that's just let it go, because I think it's the maybes are actually harder.
The other thing that I would add to that is what a lot of people do, and I probably do this too and don't even really think about it, is like as you're getting towards the closing, towards the end where they're going to sign, you want to make sure that you have something that you can offer them that's a little bit better than you had originally offered them. And now you can craft this however you want. In last night's meeting, it's easy to see it from a builder's perspective. He said, hey, we did the plan. It's a $350,000 build. I'm going to do it. I'm going to do the same. I'm going to give it to you for 335. You wanted to be at that 335 price point. I heard you loud and clear. You told me what you wanted, all the things that you had to have. Unfortunately, that's 350. I'm going to give you these things for free. I'm going to do it for 335. I'm going to give you this incredible deal. You're going to get the lot that you want, so always like kind of ending it with like, here's a little bonus. Plus, let me remind you of all those extra things that you're getting and the reason why you're doing it. And then at that point, it's just, okay, I'm getting a discount or I'm getting a better offering than, I would be getting. And he's reminding me of all the reasons why I want to do this in the first place. It's a no-brainer to sign the paper.
Yeah, no, that's a great point. I'm a big fan of Alex Hermosi and kind of his books, and he just launched a new one, and I don't know if you guys watched it, but he did this, sort of huge live stream event for his book launch, and it was really like I ordered the book, but it was like a master class in how to market, but also not so much because it felt salesy, but because he did just what you just said. He actually was like, here's all the things you're going to get, and it should cost you $100,000. It's free. Just go on my YouTube channel. It's all right there. Like, and so I think that's one of his things. It's like, just make the offers. That's 100 million offers. The gist of the book is just make the offers so good they can't say no. And so, it's a similar, I think in real estate, and especially in syndication, it's marketing and it's sales. We're not necessarily selling a product that they're going to hold in their hands, but figuring out a way to package it in such a way that it does feel that way.
Yeah. I saw something interesting the other day too, for like these lead funnels, where you're putting out content like ebooks or whatever it is that your audience wants, and you're giving it away for free, but you're capturing their email address in exchange. A lot of people have those set up. This guy had an interesting kind of play on that, where it would go into a site, and you might have seen these because I've seen them on LinkedIn before too, where it's free, but then you have the option of like putting in how much money you want to pay for it. So obviously you can put 0 and still get it for free. Right. He said a lot of people, you'd be surprised, will throw $1, $5, $10 into that field and actually pay for what he's giving for free. And so even though it's quote free, he's actually generating a little bit of revenue on it as well. It's crazy.
I've seen similar things. I can't remember who it is, but someone has they have a whole bunch of underwriting models on their website, and it basically, you get to tell how much you pay for them.
Yeah.
It's like, it's a great idea to drive traffic to the website. I think it's a smart thing. And there's all there's a lot of ways to be creative in marketing and stuff. But at the end of the day, you need to solve people's problems and sort of give them more than they're really asking for, sort of that under promise and over deliver.
Mm-hmm.
Yeah, I think that breaking that down from a psychological standpoint in terms of like the stuff, we just talked about is, kind of breaking down the session with the prospective investment partner with, first starts like discovery, right? Is understanding what makes that person tick, peeling back the layers of why this may not be a good thing for them. And also what types of tolerances they have in terms of what drives them as an investor, right? And then if they're a good fit, then getting down to actual what the scope is of what you're offering, right? And I think that but I think the discovery is so important. I spend a lot of time on discovery with not just my potential students, but also my investment partners, because I want to make sure they're dialed in. And then when I deliver what the scope is what the value is, and then the price comes at the end, or whatever the offer is. Because if you've done a good job of discovery, understanding, they're contacting you because they have a problem that they think that you can help them with. And if there's no problem, if there's no pain, there's no sale. No pain, no sale. And I think that if you go through that, I think it's really, really powerful. And to kind of segue that into like the story of like, you post a free ebook and, put the, hey, what do you want to pay for it? Whether it's $0 or $100, I think that's like putting the actual value out there first, I think is really key to having good conversions, and not just building a capital base, but also building a customer base as well.
Yeah, for sure.
And a lot of customers assign value to something based on the price. Mm-hmm. So if you give it away for free, they might think it's worth nothing, right? So and that's, I think, a big strategy in the when it comes to coaching, or when it comes to even like designer brands, right? I don't care that this purse that my wife wants to buy, I don't look at it and think there's any reason it should be worth thousands of dollars worth of $5,000 versus $50, right? Like that's but that's that's what the branding is. That's what these companies have done. They've created a way for you to perceive that the value of theirs is so much better than, someone else. And so I think in a lot of ways people see like, oh, this is a, whatever it is, it's a $50,000 coaching program or $100,000 car. It still gets you to the same place as your $30,000 car, but it seems so much cooler because I paid, all of it. So I think it's just a balancing act between all of it and figuring out specific to your customer, whether that's the investment partner or the product you're selling, like what is the problem you're solving for them, and what is their perceived value of it, and then now make it worth more than that, but charge them the same, basically.
Yeah. Yep.
Well, awesome. It's 3 o'clock already.
I know, that flew by so quick.
Yeah, it goes by fast.
You guys have any last words for the audience?
I don't. I appreciate you guys having me on. This was super cool. I wasn't.
Yeah.
I feel like we talked about a sort of a varied topic, topics, but like all important to kind of real estate and business in general. So it was really awesome. I enjoyed the conversation.
Cool. If people want to get a hold of you, I'll drop your info down in the comment section. But if you got a website or something you want them to check out, you can feel free to plug it. We don't care.
Sure. Our website is larkcapital.com, but probably the easiest thing, just shoot me an email, jason@larkcapital.com, and I'm happy to connect with anyone.
Awesome. That sounds really good. Well, thank you so much, Jason, for coming on the show. We really appreciate it.
Yeah, I appreciate you guys having me. It was awesome.
Hey, thanks, Jason.
We'll see everybody next Thursday at 2.